Now, everyone, let's kickstart the exciting program that we have for you today. We are very honored today to have our first keynote that is delivered by Miss Irene Chu. Now, she's the partner, head of New Economy and Life Sciences, Hong Kong, KPMG, China, that is on the overview of global tech venture trends. Now, ladies and gentlemen, without further ado, please welcome our speaker, Irene, on the stage. Thank you, Irene.
Hi, thank you. Good morning, good evening, depending on where you are. I'm very glad to be here to talk about the 2020 Q3. What has been the activities like? I know we've heard a lot about the challenges with COVID-19, but I must say that the trend in VC is rather robust. So let me take you through what's happening, what we're seeing in the global landscape, and then I will zoom into what's happening in Asia and China. So looking at globally, you can see a very nice rebound and continued momentum in the overall venture financing in terms of volume, and also I think overall we see a good uptake when it comes to the later stage VC investment. So up to Q3, within Q3 itself, we raised about $73 billion and closed over 4,000 deals. And almost all regions, and we talk about globally, Asia, Europe, as well as the US regions, we've seen an increase in VC investment. Notably, as you see that the deal number, when it comes to the deal count, has come down, and the type of company that are affected the most are the earlier stage companies. So they feel a lot more pressure when it comes to fundraising. And I will explain that in the later slides. And investors this year particularly are more focused on companies that are able to adapt and respond to new needs and new normal, as we've been talking a lot this year. And what's also interesting, what we're seeing, despite the market is quite turbulent, but the IPO performance has been phenomenal. So especially in Q3, and we will continue to see that especially in Q4. So what is it telling us? And when we talk about overall fundraising has increased, is that the overall medium deal size actually, especially when it comes to later stage, has increased. As you can see that yellow trend line that is trending up. Whereas on the other hand, angel and seed investment remain quite steady at the same level. And over the years, when it comes to fundraising, and we look at also, are companies are raising up rounds or they are raising down round? So if you can see on the right side of the chart, in 2020, I think what we can take comfort that there's still relatively big portion of the companies are raising up rounds, although you can see a slight increase of companies that are raising down round. What about when we talk about a lot of money has gone into late stage companies? That's also one of the features of the 2020 VC trend, is that we see unicorns continue to attract a lot of interest, and we're able to raise funding compared to the smaller companies. So in 2020, especially in Q3, the more famous companies is Robinhood that has raised $1.2 billion, and there were a couple of rounds and continue to rank #1 when it comes to fundraising. The other sectors also, especially when it comes to unicorn companies, are also benefited or somewhat positively by COVID situation is fintech company, because of increased demand in digital payments and mobile wallets. The other three companies have closed new funding round that are at unicorn stage, include SpaceX, Revolt, and the smart car company Whitemeister. So what I want to also highlight is that when we see a lot of activity going on in the market, is also because there's still dry powder in the market. So venture fund managers themselves continue to be able to raise money in order to make investment. And there are more investors looking at this alternative class of asset, primarily in the new economy, new normal. What are the businesses are able to help business adapt? So there are increasing interest among the institutional investor to shift towards these type of investment. So within the by the end of Q3 this year, we've seen $80 billion raised so far, and only in Q3 alone was $20 billion. So if we continue on with this trend, we're hoping that 2020, the amount of fund raised by venture investors, fund managers, would exceed last year's $86 billion. Now let's talk about Asia. So I talk about overall the global trend. So Asia trends are quite similar in the sense that we see a nice rebound in Q3. And in Q3, we raised about 21 billion, and there's over 1,000 deals across the region. And the rebound was led by two mega deals, and I will talk about that. China obviously is the focus, and there's a renewed VC investment activities. The interest area is what you have heard from what I mentioned about companies basically are able to address the needs in the new normal. So there's surging focus in health tech and also ed tech. And I will also give you some information about the sector distribution. One other thing, that observation we've also have seen is that the tension, especially between China and US, have, I think, given some of the founders an opportunity maybe to reassess in terms of their focus when it comes to fundraising, as well as their exit strategy or IPO strategy. In terms of the stage of investment, so that trend in Asia also replicate what we're seeing globally, is that a lot of the funding in terms of deal share are still dominated by later stage, from A to D. And the two big mega deals that I mentioned is one is in Shanghai, $1.5 billion by the Wellmaster, which is the smart card company I talked about. And then the other one is Flipkart in India. In terms of sectors, and you see most of the years that we look back, they're dominated by software companies and also other IT companies. But increasingly, if you can see that on that chart in 2020, especially if you look at the blue section, that's the pharma and biotech. And especially in Asia, we're seeing increased investors' interest in the life sciences biotech company. A lot to do with, obviously, we had a strong market in China that are demand for better quality pharmaceutical biotech product and services. But at the same time, we had a very good environment in Hong Kong with the Hong Kong Exchange introduced this new listing regime 2 years ago. So that also helped fuel the private round investment in these type of companies. Now, let's take a look at China. Obviously, we are being in Hong Kong, we have seen the very good, I would say, way how China has managed when it comes to dealing with COVID. And that rebound in the economy and consumption is also reflected in the VC investment. There's we see an uptrend, including both deal value as well as deal count. And China accounted for 7 out of the top 10 deals, fundraising deals in Q3 2020. And companies that are helping other businesses on digital transformation is a major hot area in Q3. And on the flip side, companies that are more early stage and maybe less proven in the market are facing pressure on downward valuation. Here's the top 10 deals that I alluded to. If you can see that the spread, right? 7 out of these 10 deals are from China, and then the other 3 are from India. And they range from automotive, smart car company, internet retail, also health tech. We got ed tech company, as well as fresh produce, online shopping companies. So the theme is quite consistent across, is that companies that are able to deal with the new needs, whether it's business or consumers, delivering products or delivering services, are benefiting from this current VC landscape. Also more in Asia. So what does it really mean is that when it comes to exit, what are some of the channels that companies and investors are really where we see the most active area? And I think consistently over the year, it has always been IPO rather than trade sale. And that continued that trend in 2020, 9 months up to this year. I know a lot of anticipation, especially those are in Hong Kong and also in China globally, is all eyes are on the Ant Financial IPO, which should happen this week. And that will continue. That will also help drive that overall IPO exit statistics. So the success of the new economy going public in Asia, whether it's in China or Hong Kong markets, do actually help the private round investment and the VC investment. And there is a more focus among the Chinese company to look at what we call the home market, right? Where should they go listing? I talk about the tension in earlier on, and that is being reflected in them revisiting their strategy in terms of IPO. I thought it'd be useful to share the IPO market statistics, especially in this market, Hong Kong and China. Let's take a quick look at Hong Kong IPO market. For the 9 months ended September, overall total fundraise is at $215 billion, and I'm only covering the main board listing statistics. And on the left-hand side, you can see that TMT plus healthcare, life sciences, and consumer market, that basically make up the majority of the fundraise. And we all wonder, right? Are these really the innovative companies that we've been talking about? And if you look at the right side, we analyze what are the companies that are really actually traditional industry, and what are those that are in new economy? And over 67% of those companies are new economy company. So that talks a lot about why there's so much interest and increased focus to really look at new company, innovative company, technology companies, and because the valuation and also the IPO opportunity is much greater. China shows similar picture. So this is the A-share IPO market statistics. In China, the A-share market is slightly more diverse than Hong Kong, where we see not only TMT and healthcare life sciences, we also see the industrials market. And then within the industrial market, it's not all traditional companies. There are also really advanced, we call advanced manufacturing, advanced materials type companies. So on the right side is that we also look at the new stock exchange, or the stock exchange that have adopted a more market-oriented reform. And they represent 63% of the fund raised this year, up to September 30th. Because these exchanges that have adopted the reform tend to drive and also attract the innovative companies. So you can see that overwhelmingly, the new economy company definitely are the key drivers behind the IPO activities in Asia. I thought that I will leave you with some thoughts and what does it all mean when we look at 9 months into 2020 and what should we be looking forward to for the rest of this year and also next year. I think we all paying very close attention to the development of the situation in COVID. And I think for the probably next 3 to 12 months, it will continue to drive some of the sentiment among investors. And investors will continue to be quite cautious. At the same time, they will look for specific opportunities. An opportunity where I mentioned that digital solutions, the software as a service company, they will be more favor compared to the traditional businesses. And in terms of key sectors, in Asia, you see quite an interesting sort of dynamics. It's quite a wide range of sector we think will continue to do quite well. Health tech, e-commerce, AI, edtech, auto tech, the smart car company I mentioned, digital enablement, fintech, especially offering SME financing solutions. I thought just on this, when we talk about sector, why they are important, not only just because of COVID. I think long before COVID-19, there are the fact that there's already stronger focus among the demographics that we're seeing in Asia for a better solutions, whether to drive efficiency or to give access to a wider population to good quality services, whether it's healthcare or education. So that already started before COVID. I think COVID kind of accelerated the interest and also opportunity. And you can see where the winners and losers are depending on how well they penetrate the market. And also because of the tension I talked about earlier, there's more focus on the regionalization. When we talk about regionalization, it means that how well they're serving the local market. And it's less about going sort of international at this juncture. I think it's more about how well you capture the local market. And are you somewhat dependent or reliant on international technologies or talent in order for you to grow? Especially in Asia and China, I think that phenomenon is more pronounced this year. And one other thing I thought would be good to also bring up when we talk about Asia is that corporate investors make up a good sort of portion of the overall investment in venture companies. So about 40 to 50% of the funding is actually coming from corporate investors. So for companies, whether they are addressing the broader market needs, there's another statement to look at is that what are some of the needs of the businesses in this landscape when it comes to digital transformation, and also whether they need to pivot to a different type of business model. I think venture companies who can capture these opportunities would also be able to attract investment from corporate investors. And last but not least is that we still see dry powder in the market. And we believe that we continue to see first-time funds that are able to raise money. So with that increase, that should help fuel the activity moving forward in the coming quarters. So all in all, I'm quite positive. And despite all the challenges, I think the founders and the investors and those who have been working very closely with their investors are looking for ways to get out of this COVID stronger than before. So with all that, I'm just giving you a quick snapshot of what we're seeing in the VC landscape. If there's more interest to understand more, I mean, we issue these type of venture analysis every quarter. So you can feel free to download the report. It's on our website. We also look at the capital market trends in Hong Kong and mainland every quarter. So the latest one that is on there on the screen as well. So with all that said, I hope that you find this useful, and I look forward to more conversation throughout the day during this event. Thank you.